Hello everyone, this is Dr. K. Jagannayaki, Professor in BA Department, Institute of Aeronautical Engineering, Hyderabad. Today's topic is window dressing. After going through this topic, the learner will be able to understand the concept of window dressing and why companies they will do such kind of window dressing. So coming to the introduction, window dressing is actions taken to improve the appearance of a company's financial statements. It is particularly common when a business has a large number of shareholders so that management can give the appearance of a well run company to investors who probably do not have much day to day contact with the business. It may also be used when a company wants to impress a lender in order to qualify for a loan. If a business is closely held, the owners are usually better informed about company result, so there is no reason for anyone to apply window dressing to the financial statements. So in general, the companies will adapt this kind of strategy to acquire funds from the general public. If they want to raise funds or capital, then this is the best way they can able to appear in front of the external users. Coming to the examples of window dressing, cash. So postpone paying suppliers so that the period end cash balance appears higher than it should be. In coming to account receivables, record an unusually low bad debt expense so that the accounts receivable and therefore the current ratio figure looks better than is really the case. In case of fixed assets, sell off those fixed assets with large amounts of accumulated depreciation associated with them. So the net book value of the remaining assets appears to indicate a relatively new cluster of assets. When you take revenue, offer customers an early shipment discount, thereby accelerating revenues from a future period into the current period. So these are all some of the examples of window dressing. Even if you take depreciation, so in case of depreciation, switch from accelerated depreciation to straight line depreciation in order to reduce the amount of depreciation charged to expense in the current period. The mid-month convention can also be used to further delay expense recognition. Expenses withhold supplier invoices so that they are recorded in a later period. So these actions are taken shortly before the end of an accounting period. So these kind of changes the company they used to make in the existing period so that they can able to project themselves good in front of the external world. So let us take the illustrations reasons for window dressing. So in most cases, beneficiaries of window dressing are those who use this practice, that is companies, mutual fund managers. In many cases, managers' remuneration, that is salaries and bonuses, depend on how well their companies or mutual funds perform. So there is a direct interest in making financial results or liquidity look better than they really are. So if you see this particular table, the beneficiary if you are taking as company, why these companies they will go for window dressing? The reason is to obtain funding. So the companies raise funds or borrow money from the financial institutions and banks. And what kind of window dressing action the company takes? increase profits and liquidity ratios, and who is mislead means the borrowers from whom the company seeks funds like banks and other financial institutions. And another reason is to reduce tax payments. The window dressing action is decrease profits by increasing expenses. Then they are going to mislead government. And third one, to smooth financial data like sales, expenses, accounts receivables, etc. The type of window dressing action is record of sales or purchases in an inappropriate period. It gives large discounts to debtors for payments received before period end. So in this case, owners they are going to mislead with this type of action. Then coming to mutual funds. Okay, next. To hide some problems like liquidity, profitability, poor management decisions, the window dressing action taken by the company is increase cash account balance at the period end, increase useful life of fixed assets. In this case, owners are misled by the window dressing action. Whereas coming to mutual funds, the reasons for window dressing are to improve fund portfolio structure and to increase portfolio value. The relevant window dressing actions are buy more well performing stocks and selling non performing ones. And in this case, investors going to mislead and buy additional well performing stocks at a higher price. Even that case also, investors they are going to mislead. So coming to forecasting, even in case of window dressing also we used to consider qualitative and quantitative methods which we have discussed in case of the previous one also the same thing applicable even in case of window dressing. So here we are going to make some kind of future forecastings involves future events which is always even the companies they used to go with the different types of financial related data that is possible based on past and present events, and they will use appropriate forecasting techniques, and they also include some kind of process of forecasting. First initially they are going to develop the basis, then they will estimate the future operations of the businesses, then the company also regulate the forecast and they will review the process. And coming to the sources of data forecasting, they will collect the data by using different kinds of sources, primary and secondary sources. And even in case of window dressing, also sometimes the companies they used to assess the capital expenditure involves and how do they predict the future capital investments, how do they allocate the funds, the assessment of financial viability, whether the company in a position to repay the loans or not, whether it is running with profits or losses, that everything should be forecasted by taking into consideration the financial statements. And this forecasting, whenever they are going to do such kind of things, they will adopt a systematic approach and it should be conducted by way of analyzing the historical data. They used to identify the trends, and also sometimes they need to have proper collaboration between and among the relevant stakeholders of the company so that they can come out with effective decision making process. So in case of market research and benchmarking also useful because they need to make accurate and realistic forecast, and that should be possible just by acquiring knowledge and collecting some kind of feedback from the market so that in the future the company may increase their market share. As a result, they reach the growth prospects in the long run. Thank you.
Like, share, and subscribe. Hit the bell icon for more updates.